Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. It's beginning to look a lot like Hump Day. It's Wednesday. Hope everybody's having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had a great trading day yesterday. Or more apropos, are still awake after yesterday's trading day, as we had one of those days where the market just chopped around and didn't do a whole lot of anything in anticipation of today's FOMC meeting. We have our Fed meeting coming out today, so let's talk about what the markets will do with that. But first, if you're new to the channel, click the subscribe button, hit the notification bell so that you get the alerts and the updates as they happen. And second, for those of you that are regular viewers of the Daily Market Commentary, real quick reminder, at the end of January, we're holding a live class. So if you're interested in coming to the live class in beautiful Houston, Texas, just go to tradersarmy.com/active-trading-intensive. It's going to be a unique class where we do both futures and options. So futures, we're going to trade futures in the morning, options in the afternoon, designed to really focus on active trading. So take a look if that's something you're interested in. There are only, I want to say, about 6 seats remaining in the class. Very small class, so feel free to join up. All right, so S&P up 1.5 points this morning on our FOMC meeting day. Now, the Fed meeting is supposed to come out. It's our last Fed announcement of the year. It's supposed to essentially leave rates unchanged and with a projected 1/4 point rate increase in both 2020 and 2021. It's a slightly more, I guess you'd say, hawkish statement than originally, but it may, depending on what they say, may pull us off of some of these highs. The other thing that's kind of keeping the news at bay is the potential for the China tariffs, which go into effect on December the 15th. So those are both things to keep in mind. Are the December 15th Chinese tariffs, as well as the FOMC. And I think with both of those is why we're not seeing a whole lot of movement in this market. So yesterday we looked at this little area here for a potential supply area reversal. Price popped up into there and then got, the next pivot above there would be here. Didn't really jump above there at first. Eventually came in, but just didn't do anything. It was a super small level. It's only 2 points. It was a tiny little reversal without a whole lot of movement occurring. So because of that, I would choose not to use either of these other supply levels that happen to be above and even the all-time high. I don't think I'd want to use. So I'd be much more likely to look for a breakout one way or the other. But for the most part, I don't have a whole lot of tradable opportunities today inside of the equity markets. There's not a whole lot of tradable opportunities out there. Just waiting to see kind of what happens. So when I go to the Nasdaq, very similar picture. We got this all-time high up above us. The Nasdaq also, like I said, no real great tradable opportunities today when it comes to the reversal style of trades that are close to current price. Technically, this is still a potential short area after we hit it on Monday and got a little bit of a sell-off into Tuesday on that one. But I don't really want to try to short this close to the all-time high. You're better off holding off on some sort of a breakout, and I feel like with the FOMC, the CPI numbers, the China tariffs, that I don't know that a news-related breakout makes the most sense. It might be better to wait for price to come into a reversal area, unless we're basing below the all-time high. Basing below the all-time high, then in both of these markets gives you a potential for a breakout to the upside. Crude oil. We put this level in a couple of days ago. We've still not come above it as of yet. We are kind of still staying around that 59 area and have not broken above that level, where our momentum to the upside is definitely waning, however, as we're seeing that there's a better chance that it'll roll over from here. since our momentum to the upside is definitely in kind of that waning state. 59.50 is still that it's got to break above there, and I had originally thought that we would eventually get to 60, and we still may in the next few weeks. But it's definitely slowing that upside momentum as we go. We're not creating new highs each time. So if indeed we do break to that upside, I've got to look at, say, the 4-hour time period. And on the 4-hour, we've got clean air above that 59.5 for the most part for price to continue to move higher. In gold, yesterday we talked about a candle-to-candle potential area up in here, and the market really didn't do anything yesterday in gold overall. So I'm going to remove some of these notations only because it makes the chart a little bit hard to read. Left them in there yesterday just to kind of have them in there so we knew what was a potential. We could theoretically see a breakout up above this area here as we continue to rally a bit higher if we get some basing, a breakout above there for a small intraday trade. But other than that, I don't really have a whole lot to add. And so, I don't want to I don't want to feel like I'm not adding a whole bunch of things to the charts, but this is one of the days where there's no sense in continuing to force add more levels. Force adding levels has always been a problem, I think, for a lot of traders, is each day they come in looking for new levels, and some days the market just doesn't create great ones. So I don't want to force it if it's not there. Looking next at our 10-year note. So on our 10-year note, we still have that supply level up above. Yesterday didn't do anything, so that stays the same. The Aussie, we did break down, as we talked about that from a potential breakdown area, and then we chopped around in here, gave it a little bit of a break, but then after 6 candles had gone nowhere. But what does our 6-candle rule tell us? Oftentimes after we have a 6-candle break, and if it broke down 6 candles, goes nowhere, does set up for an upside breakout. And in the overnight hours, broke out pretty big to the upside. Now, I don't know if anybody grabbed that trade. If you did, phenomenal. If not, you do have a little bit of a reversal potential right here on a long. In the euro, we talked about the euro level. We were rallying a little bit yesterday, but we wanted to get through some of these bigger wick areas. We rallied up to the top of this one, and now we're pulling back just a smidge. If I look at the 15-minute chart, I can look and see, are there any quality supply or demand areas worth leaning on? And the one that I go to is probably this area in here. My problem with this area is the time of day that it's formed. From a pure price action perspective, this is a pretty good level, but from the time of day it's formed, it loses a lot of that validity. So, as I come a bit lower, you've got a little demand area here where we could see a bit of a reversal. But that's really kind of the only one that I see that's got a lot of quality. And what I typically do is I start at current price, I look left, and then I start to go down from there, and I look at all the demand areas. And this one here is not terrible, but my problem with this one is that we came close to getting back into it on 3 separate occasions, and it's kind of a retest of this area here to the left, and that's why I'm utilizing this one. Now, this is a little bit of a retest of this area here to the left, but this is formed at such a poor time of day that I'm not sure that this had to be more orders that were put in right at the European market open. And so, that's always what I want to do is identify the current price, look down and to the left to find, the next area of fair price value. Next, the Canadian dollar. Yesterday, we outlined some areas where it would have a hard time popping through, and it's still in between those areas. So nothing has changed from our video yesterday, for those of you that watch this on a daily basis. Great British Pound, Japanese Yen, as we dive into these. Now, we did have a slight gap down in the pound as we gapped down, sold off pretty hard yesterday inside of the pound. I think that there's a chance that we'll continue to roll over and come down from here. Our 4-hour was showing us a weakening of momentum. Now we gapped down and we've rallied back up just a bit. And so if we get below here, then I think you could see price move down a bit further. into this range down here for a potential reversal. And then the Japanese yen, I said yesterday, we've got to eclipse this big long candle before we would be willing to do anything, and our levels are already in place beyond that long candle. So as far as today goes, I think some days are good days to sit on your hand, and today could be one of those days. Don't force levels that aren't there. Wait for the market to show you good levels and then make the trades accordingly. And typically this happens once a week or so, where there are just days where it just doesn't make sense to force a trade, but that usually is preceding big moves, and then those big moves set us up for multiple days of good trading. So keep an eye on that as we head forward. Till tomorrow, everybody, have a phenomenal day. I will talk to you soon. See you.